Okay. Hi everyone. Let's have a little bit of a talk about the swing trading. A little bit more depth. Obviously, it has been covered in bootcamp a little bit, but yeah, ever since I made that one, a lot of things changed, and since I kind of focus on this swing trading aspect of things a lot more than I used to before. There are actually some things to kind of go through about and talk about, which can give you any kind of a nice insight maybe. So first things first, it's nothing new really. The strategy wise, you can see that it's even simpler. There should be this actually template. In terms of kind of indicators, the candle coloring stays the same. On the on the daily chart, I have this new trading view tool which plots the monthly profile. This is kind of a new addition that I added. I also have it on the slower time frames, so I will talk about it in a bit. And I have this composite profile and on the side. So first things first, when it comes to the profiles, for the swing trading, basically, it's a little bit different when if you compare it to the previous video, basically, which I showed you, marking all these kind of edges of the volume, the points of control, lining it with the price action. That's more of a setup for day trading, obviously, because although all these kind of nodes and points of controls, very often get reactions. You generally want to get like a bigger context from the market and let things run more instead of just kind of trading back and forth between all these nodes. So that's not something that I do in this kind of approach. I also don't really use the monthly profile in such a way that if we accept inside the prior month value area, for example, there has to be this rotation for the downside, although funnily enough, it's kind of something that happened here, for example, but no, I don't really use the kind of these 5 auction market theory principles in this way. I am just kind of looking at the profiles to see where basically only where the volume was traded and where the volume wasn't traded. This is the USD CAD. This is a trade I took yesterday. I will talk about it in a bit. But like I said, the profiles are really here just to see kind of like where the activity happened, where there is a lack of it. So I don't think this is a best example, but considering this Bitcoin bounce, that we have, this is kind of a from price action perspective standpoint, this is a little bit of a messy. On this kind of a pullback down, it's this structure seems a little bit messy to find a solid level of where market might bounce in the future. But if you take a look at the profile, you will very quickly see that you have this naked POC inside this consolidation. You have your cluster here basically, and you get the kind of a better idea of level. If you for example have these type kind of two clusters, when market I don't know, it looking something like this, and then it's retracing and you don't know where you want to short it, for example, you might want to be looking at profile that is looking something like this basically with POC here. So basically very little volume was transacted here and quite a bit was traded there, so this makes it a better level to trade. So that's just the profiles and how I look at them from this kind of a swing perspective. So in regards to time frames, you can see at this kind of a top left corner that there is not really many of them basically. It's only the weekly, daily and 4-hour time frames that are important, and I will in a bit talk about you know, kind of a possibility to go in lower time frames and the pros and cons of that as well. So it's really as simple as with kind of a any type of approach basically that I talked about previously. You know, it's nothing really new. On a weekly chart, I mark out all the clusters, you know, look at kind of a swing points, you know, these kind of a failed swings. The cluster is here, for example. It's the weekly is really here for you to give you the levels, and I mean the weekly levels, and if market is at the weekly level, you can obviously play it to the next weekly level. For example, you know, there was a kind of a weekly QM back in last year. Basically, you know, we had this level of resistance. Let me just change the color so you can actually see that. You know, we had this kind of a level of resistance. You know, we broke the low, basically tested it. There is the next weekly cluster, you know, sitting somewhere here. Obviously these levels are huge and you will be adjusting them on the lower time frames, but you know, the overall idea, you know, you get it. It's basically if you were only trading a weekly time frame, you know, as you have, for example, this failed swing here, where is kind of a next level on a weekly where market can go and trade. You know, is this cluster right here, this move that caused the up move. Obviously there's this SR level as well, but you get the idea. One thing that you need to be kind of mindful of when you are trading the weekly time frame is that, although I'm not the huge fan of, you know, candle closes, as I explained in the bootcamp previously, you know, like the hourly candle close, that confirming any kind of failure, you know, I'm more looking at the volume and stuff like that traded. But when it comes to the actual candle closes, the weekly and daily time frame, I still think that they play decent significance, because obviously so many people are looking at them. You know, the weekly close and daily close is always something that is so often talked about, but there has to be kind of a context for it. You know, for example, this weekly candle, I remember this one from Twitter. A lot of people were mentioning it. This is a very ugly candle, basically. You know, with this kind of a attempt to push higher, close below, but it doesn't really mean anything. You know, it didn't really take any high, it didn't really test any kind of a weekly level. So this candle like this for me is kind of a meaningless. You know, this candle, the body is much higher, you know, compared to this one, but it failed to kind of break above the high. So don't get too hung up on the weekly candles. Always look for this kind of context. Another thing that I wanted to mention is that this example, okay, this is the New Zealand dollar USD. This is the trade. I haven't took this trade, but I've been looking at it. So here is a kind of a QM structure on a weekly. Okay, let me delete all these things. You know, you have this kind of a support. We broke below. You know, traded above. Closed above here, you know, now we're pulling back to it with this already been tested, basically with this little bit of a cluster. So first things first, if you want to trade it as a weekly kind of a QM, where is your next target? Obviously it would be this high, and then most likely this high right here. That's all kind of nice, you know, because obviously it's a long move. But if you are trading this as a weekly structure, obviously your stop has to be based on a weekly structure. Therefore, you know, it's only 1.5 hour for a trade that might take a long time to set up. You know, the second target is a little bit higher, but this is not really how I do things. You know, if you have a weekly pattern, and this is, I see a lot of people doing this kind of thing, is that they have a weekly level basically, and they take a trade based on that, and already kind of assumed that this is going to, they will use some small stop basically on hourly time frame or whatever from a week level, and they already going to assume that it's going to kind of to the next week level. Well, that's kind of nice, but on the other hand, this is where I kind of pay attention to the weekly closes and the daily closes, because the day hasn't, they haven't closed yet basically, or week haven't closed in this case. So it's today is Friday, so the likelihood of this completely failing, and the candle closing here is kind of a very small, but it's still, there is a possibility, and in that case, there would be no reaction whatsoever. Another thing here is that you can say that basically, if I put all these things away, there is this swing low on a weekly. You can kind of say that this was a V reversal. We had a little bit of a cluster here, this kind of a huge, this is actually a buying bar, but still, a lot of volume executed this week. If you will go to lower time frames, you will see that there has been some sort of a consolidation or something where a lot of volume was basically executed, and we tested it here. So this level is no longer fresh, therefore I want to see a kind of a swing failure, coming into it, taking out the low, pushing higher basically. Well, once again, if we are going to trade that with this weekly target in mind, well, once again, you don't have this weekly candle to confirm it. For me to be like, okay, this is really a weekly bias, we are really going to here or here, basically the weekly candle actually has to take out the low and kind of a close above it. This is not a weekly bias, like a confirmed one, but it doesn't mean that you cannot basically trade the level. If I go to the lower time frames, you can see this is your kind of a consolidation before the move, as I mentioned. If I go to the H4 time frame, right here, let me delete this to make it a little bit cleaner. We took out the lows. This is that weekly swing point basically, and you have this is really a not the cleanest one on H4, but you have this QM structure on H4. We pushed higher to this kind of a cluster and fell from that. If I show this on H1, it's much cleaner basically, but still, this is not confirmed weekly bias. You can take it from one H4 level to another, which in this case would be to fill this little bit of a LVN here towards this cluster level, so that's all great, but assuming that this is going to run to the next weekly level is not how you use the weekly chart basically, and it's completely the same for the daily chart. Why I didn't go bid basically on a pullback is because you have this kind of a compression lows without any kind of excess. This is not, once again, not something for me where I feel great to blindly bidding this. So this is why I didn't basically bid the pullback. But yeah, this is one of the things about the weekly levels and the daily levels. But in regards to marking out charts, it's extremely simple basically. The trade on the USD CAD which I took, I posted it yesterday on Twitter. You have this basically you have this kind of a weekly cluster here which was never really tested in here, and then you had this weekly swing point. We traded below it, then this week kind of really closed above. So my weekly kind of bias here is that market should at least trade toward this level. You can see there is this composite POC as well, So this makes it a kind of a decent target based on this failure at the support. Basically, if I go to the daily chart, we have this daily QM basically in here, or you can just call it a cluster. You can see I just drew the box around the candle. It doesn't really matter, but you have this kind of consolidation. We moved up. This is the swing high that made a low, so the market structure is broken here. So basically this is a good level to bid, and if you take a look on a daily, once again you have this kind of a cluster structure with the POC from March basically, so you get a little bit of a cleaner picture, and this, like I said, makes it a nice target. One thing that is pretty interesting from this, you could actually trade the both sides of this, because you can see that you have this kind of a bearish engulfing candle on daily after we moved away, so you technically could sell it for the pullback. The H4 chart is also very clean here. I didn't do that, I just stayed with my kind of idea to go long. And if I go to the H4, this really gets much cleaner. Basically we have a support, you broke below it, make a new high, go and retest it. This is your kind of a previous level of support. It tests perfectly and goes from there basically, finishing any kind sort of a 3-drive pattern here. So, and this is also a 3-drive in here. This USD CAD actually does it quite often. So this is kind of it from this kind of a breakdown perspective. I will show you a few more trades to make it easier, but I want to talk about one thing as well, and this is kind of because once again, how I basically executed the trade. I had a limit order here. Okay, this is where I put my order, and I'm just kind of waiting, if I get filled. The order is active basically before it reaches my target. If the market would really push somewhere inside this area, inside this box, for example, take this high or really go inside, I would cancel it, because in that case the target was reached without filling me in. But what I want to talk about here is that the time frames basically, because if I go to the 30-minute chart, you can see that you have this QM on 30-minute, which is in this case very clean level, in here basically, which would increase your risk reward significantly. Obviously for this trade, as I got filled in here, or even you can take a look, if you take a look to the left, obviously you have this kind of a V reversal with this kind of a cluster structure, so you could place your buy order here and put stop below here. Once again, this would be a huge risk reward ratio trade. What I did though, and if you are trading the H4 chart, you don't see that, obviously. So my stop went below this low, which the risk reward is significantly lower than if I would either trade this or trade this structure basically. This now depends up to you, and I will show you in a second trade in a bit. Also this downside of it, these things won't happen that often, to be clean like this, and also you will get stopped out. You can get stopped out before the move happens, if you will go obviously too tight and with your stop loss basically. I think there are kind of two ways to think about it. It's at the end of the day, it's really a question of what do you prefer. If you don't mind a kind of a lower win rate with a higher risk to reward ratio, then you can because I'm not sitting here, you know, looking at the 30-minute chart. Basically, that's not what this strategy is about. This strategy is really at kind of a being just looking at the H4, you know, sticking to daily and weekly levels. If there is no a daily or weekly level, you can trade the H4 patterns into them, but in most cases you will see that there will be some daily and weekly level. These are the markets that I look at. I will talk about these alts in a bit, but overall, you know, this really is the higher time frame trading strategy. So the only time you should go to 30-minute chart, I wouldn't go lower than that. You know, if you would try to do something insane like execute this on 5-minute chart, then I think it's, you know, too much things to do, too many markets to focus. But you know, 30-minute hourly is still completely kind of a manageable. But yeah, like I said, you know, your win rate will basically decrease, and but your risk reward will increase as well. So let me actually show you GBP/USD. This is the trade that I took. You know, I spoke about it on that YouTube review. I was actually able to cut it yesterday, which turned out to be a smart idea. So I will. And it makes it a good example basically on, you know, where to cut trades and so on and so forth. So first things first, you know, why did I take this trade? It's once again fairly simple. If you take a look on a weekly, there is this kind of a weekly cluster structure, you know. In here basically you have this weekly bullish engulfing candle. It's a decent area for any kind of bounce, although there is this kind of a double bottom on a weekly, so it's not the best one. But you know, considering how much beating the GBP took, you know, it wasn't the worst kind of level. It's not really a important thing. We tested it here, which I would never basically take long when I see lows like these. You know, you can see that there is no wick to the downside. Is extremely rare thing to happen, but you know, that's huge, like no long signal to me. And you can see that we moved higher, you know, tested this cluster here, sold off, fixed the lows, and then last week on Thursday, I believe it was a ECB or CPI or something along these lines, we had this bullish engulfing candle basically to the upside, you know. Then we went to the Easter week, but you know, I was kind of thinking that okay, this is a decent kind of a area to buy it coming the next week. And one other thing that was giving me a nice confluence for the trade were these 3 daily lower highs, as you can I hope you can see them, you know, here basically. This kind of a poor structure without excess basically that might get traded, you know, squeezing these people here. Okay, so the trade basically went along the lines that I wasn't looking at the lower time frames at all. I had a limit order. Somewhere here. Basically the trade idea was I was aiming for this place, so it was 3.5 hour trade. I got filled early in the morning on Monday. I think it was around here basically, using the stop of this candle. I think what I actually did here was I went to the H1 because there was this huge wick on a H4, and I just kind of adjusted it a little bit, you know, and use this kind of a down bars, you know, as my fill. But that's not really important thing in this case. So the trade basically went sideways, then it went a little bit to the profit, and then we had this thing yesterday, you know, we tried to push above these highs right here, and make this kind of a failure on a H4. There was this kind of a indecision candle, but once the trade started, you know, there was no signs of buying here. This is where I basically cut it, you know, because you have this kind of a cluster candle here, but it got immediately tested here and here, so it's not really a fresh one, and since there is no demand and interest of buying it, I just cut the trade. So I cut the trades on the swing positions where usually it's a H4 kind of a swing failure, you know, pattern, you know, when on H4 market tries to break some level and fails to it, you know, I'm usually, you know, either cutting a trade or trailing a stop aggressively. Same goes obviously if you hold a trade for a couple of days, you know, if, let me give you example of that. If you, for whatever reasons, you know, let's say you got long somewhere here, I don't know, let's say that you got basically long here, market push higher, pulls back, and then you have this kind of a daily candle, this one that, you know, takes the high, closes below, and I start to see that next day is not really pushing it, I'm closing the trade, you know. Funnily enough, in this case, you know, it pushed higher and then sold off. But, you know, it's you need to be watching for any kind of signals that might be telling you to get out of the trade, which is nice thing here, because obviously you have plenty of time since you are trading on daily and H4 charts as well. But let me talk about this GBP/USD on a 30-minute chart. So you had this kind of a cluster area here where you wanted to go. This is a daily cluster here. Basically, you wanted to go long somewhere into here. On the 30-minute chart, I would kind of narrow it down here. You can see that if you would go tight with your stop here, you would get stopped out. If you would wait for the initial reaction to make this kind of a QM, you know, you would get stopped out. If you would then wait and see that this low was taken, market pushed higher, retested it here, you know, you are getting stopped out. And only when this high volume bar happened down here, you know, when with pick up on the R vol, we once again pushed higher from that, you know, made a new high. Basically only this attempt would work. So this is kind of the thing that is very tricky when it comes to the lower time frames, because technically, you know, your invalidation for the idea at this point is below this low. So, you know, the fact that you are getting stopped out doesn't mean that this market is necessarily going to go immediately down, although obviously it went in this case at the end, but you know, it is once again this thing of personal preference and kind of a, you know, looking at the strike rate and looking at the risk to reward ratios, basically. Because, you know, I should have cut the trade yesterday. The H4 candle that made the rejection closed around here, you know, I was long. I was in a little bit of profit, you know, basically at the kind of a ideal place where I should cut the trade, but I just kind of let it move to break even and cut it later. But obviously, let's say that you skipped all these failed attempts, and then you just would get long right here on the 30-minute chart. You know, you are up 4.5 hours basically at the top, and obviously you can, you know, you might kind of want to even narrow your reward down because you are up so much, you know. Obviously, if you drag it all the way up, you know, this is 8-hour trade only to this previous daily high, you know, and I was targeting all these highs here. So once again, you know, you are getting stopped out 2 times, but then you kind of end up with this high win rate. And even if you would then decide to look at it closely, you know, you break the structure here on a 30-minute and retest this 30-minute cluster before this huge sell-off. So you might be like, okay, you see this candle, it's like, okay, I'm done with this trade, you know, and you're still closing it for over 3 hours. So this is the kind of a pros and cons of switching to lower time frames, but if you will do that, I still kind of want you to, if you will go with this approach, you know, on the lower time frames, the 30-minute chart is only for the execution. You know, all your ideas come only from weekly, daily, and H4. So don't go too insane on 30-minute chart. You know, try to kind of trade that, because that's, you know, it's not the purpose of the strategy. You know, I am usually just executing on H4 because, like I said, you know, currently, unfortunately, I don't have much time to sit around here all day. I'm figuring out, you know, moving stuff and stuff like that, basically. So it's like, once again, the personal preference. Another thing, you know, what you need to think about. This month, I think I took 4 trades. You know, funnily enough, they all kind of worked out pretty well. So it's, and I will show you the trades that I took in a bit. But you know, I'm up around, I think around 7R, which you need to kind of think about, and this is only from executing on that H4 chart. You know, it's not for all the trades. I only stayed at H4. I never went to the 30-minute chart, and I also missed some trades as well. But you need to think about the trading, the account you are trading with. Obviously, you know, I am kind of fortunate enough that I can, you know, that for me the 7R is kind of a enough, you know, significant enough money to not really be too bothered that I could, you know, squeeze like 2 more R from this trade if I would, you know, babysit it on 30-minute chart and wait for a pattern to set up. So definitely, if you are trading with a smaller account, I would recommend you to sacrifice this little bit of a win rate aspect of things and try to narrow the trades down, you know, a little bit on that 30-minute chart. You know, you can basically afford to take few more losses compared to, you know, the higher risk rewards will be worth it and will help you grow your account a little faster. So 2 more things I wanted to mention. You know, the Bitcoin trade, I think it's was explained kind of enough, you know, why I took it. We took out the lows. You know, you have this engulfing candle. This is ugly candle as hell, but I decided to still stick with it because, you know, this easily can be just kind of a taking out the lows. You know, you have this high volume bar as your kind of a cluster for this case. And once again, if I would decide to go to the 30-minute chart, I would just use basically, I would use this whole consolidation, you know, this from this high to this low. Funnily enough, I wouldn't get filled, at least on this BTC-USD inverse contract. So yeah, that's also one of the downside. If you will narrow things too much, you might not get filled in the end. So something you need to pay attention to. Some of the trades that I took, I am in a ES trade, which is one of the examples that where definitely would be better to look at the 30-minute chart. I had the order for a couple of days here, you know, once again, fairly simple trade. I think I made a mistake here. We kind of pushed from here, you know, took out this high, then make a low, you know, made this kind of a QM on daily. It's pretty messy, much cleaner on H4. You know, simple once again, you know, support broken, new high. You have a cluster here. The mistake that I made here was that I didn't pay enough attention to this kind of a compression below the market, and you can see I got fairly punished because I am in a nice little drawdown at the moment. I entered here, you know, I had a limit order here actually, so we really went down and took out all the kind of these stops, you know. Hopefully this will push higher from there, but yeah, not the best execution from me. This is one of those things where you could actually go pretty nicely with looking at the lower time frames. I don't know why. I was looking at this, this morning, and I was like, yeah, this is a stupid structures along blindly, but it is what it is. We all make kind of mistakes from time to time. This is forming as a nice QM here. You are kind of reclaiming some levels of support, so definitely you could go with this kind of 30-minute setup inside the structure. This seems to be playing fairly nicely, or look at any kind of a cleaner structure to form on 30 minutes. So this is one of those cases where you could definitely benefit from that a little bit, but I don't know, once again, that's kind of up to you. This is overall not a cleanest trade. I'm really second guessing myself why I took it, but it is what it is. Another trade, obviously the crude oil long that I took, from here basically all the way up to, I closed the trade here. Funnily enough, it hit my take profit exactly before selling off, but this is once again a good kind of a example of trade management, basically. Idea for a trade, extremely simple. You have a still kind of decently sized uptrend, basically. You make this daily cluster somewhere in here, and you test it here. We tested it on this day and pushed away from it, and you'll very often see this thing where markets make these kind of a double bottoms. Then a lot of times, if we trade them again and make this kind of a failure at the bottom, basically, kind of close above, you will often see a rally in the market. This is one of the patterns which is, I see, is as a huge bait. You have a level of support, you will come into it, not really take the low, bounce a little bit from it, everyone starts to chase the move, make one more kind of push towards, fail to close below, and rally from there, basically. For this trade, what I did basically was I kind of basically I try to front run this daily candle, basically. I was because when I took the trade, the daily candle wasn't really looking like this. It haven't closed yet, but this is one of those kind of a riskier ones. I just got in after this candle closed. If I would go to the 30-minute chart, though, this is kind of nice. You have this high volume selling into the low. It gets reclaimed. It is not going to form any kind of pattern, but this is one of those failed swings I talked about. When you have this really huge relative volume traded, then you can then just kind of look at this as overall kind of cluster of volumes, basically, which should hold essentially. So your execution on 30-minute chart would once again result in this massive huge risk to reward ratio. Not something that I did. Obviously my stop went, it was still a big risk to reward trade. Nonetheless, it looked basically, I think I did something like this, I think I got a little late here, but it was like 6.5 R basically. This is how the trade looked in the end. So still fairly decent, for this one. But once again, the simple idea, and you are trading into these lower highs. So once again, this kind of a weak positioning, untested point of control, and untested H4 cluster here. So this was a very solid trade on crude. The trade that I took on euro, which ended up in a loss, it was very similar situation as the GBP trade. You had this view on the daily chart. You took out these lows right here. You pushed above, kind of closed above the structure. I was ready to bet on this pullback. which I did here, and I got stopped out. But if you take a look on a weekly, look how this weekly kind of closed. This was a nice warning sign to not really pursue this trade. Obviously, in hindsight, you're not gonna win all the trades, but yeah, this was kind of a nice example of the weekly candle. And very often when you see this kind of a huge buying which is not really kind of followed through immediately, the trade is more likely to fail. Actually, this is something that, yeah, this was not the smartest idea, but the setup is there. You are trading this daily cluster, you took out these lows, so technically this could have bounced at least a little bit, but it just went straight down. So nothing really there. And you can see once again on 30 minute you had this push, but it failed to sustain basically and just failed overall. This is one of the issues with the 30-minute chart, especially if the trade idea is not going to work out completely. You can really kind of spiral down, because obviously if you are kind of betting this, and let's say that this went straight pretty quickly to the stop loss. So this is actually, I like the trades that if I'm wrong on a trade, I want to get stopped out quickly. I don't want to spend few days in this thing and then just end up getting stopped out. This is a kind of a good, all things considered, case. But if you would really consolidate inside this area for, let's say, 3 days, which can totally happen. Sometimes you'll just, let's say I shorted here, continuation towards downside, whatever, it takes 3 days basically until really the move kicks off. If you will get stuck on the 30-minute chart too much, you will have a lot of kind of back and forth on the 30-minute chart, which can totally kind of screw you up. So once again, this comes back to this. Executing on lower time frames, you need to also be careful of that, because if you take a trade based on a daily level or a weekly level or whatever, it can really take a couple of days for the move to actually happen. It's not going to be this kind of a instant reaction you might be used to from trading lower time frames. So once again, there is kind of this downside if you will go too low. I talked about this thing. Extremely simple trade on New Zealand dollar. This happened a while back. You have a overall, at the time there was a little bit of uptrend. We broke the structure here, daily engulfing chart, back into the cluster. The highs were, there was this double top at the moment, so really simple trade, executing inside the H4 level in here.